We usually think of the price of silver as a number on a screen. It goes up and down based on supply and demand. But what if the price isn't a market signal? What if it is a weapon? There is a theory circulating in the darkest corners of the smart money world, a geopolitical conspiracy theory that is becoming harder to ignore. The theory is that the BRICS nations led by China and Russia are tired of the US dollar weaponizing the global financial system. They want out, but you can't just quit the dollar. You have to break it. And the fastest way to break a fiat currency is to reprice real assets. If China could force the price of gold to $5,000 and silver to $300, they would effectively devalue the dollar by 80% overnight. Some believe they are not buying silver just to make solar panels. They are buying it to drain the collateral of the Western banking system. This is the silver attack theory. And if it's true, the war has already begun. Why would they do this? The motive is survival. The US has weaponized the dollar. We seized $300 billion of Russian assets. We sanctioned Iran. We used SWIFT to punish our enemies. China knows they are next. If they invade Taiwan, the US will freeze their bonds. So China needs a financial shield. They need a way to trade that doesn't involve New York. They are building a parallel system. They are buying oil from Saudi Arabia in yuan. They are buying grain from Russia in rubles, but nobody trusts the yuan or the ruble. So what do they trust? They trust what backs it. China is converting its massive trade surplus, which used to go into US treasuries, into physical commodities: gold, silver, copper, oil. They are moving from a debt-backed system to a resource-backed system, and silver is the cheapest, most strategic resource on the board. How do you execute the attack? You drain the casino. The Western financial system, COMEX LBMA, is a fractional reserve casino. They sell 500 paper ounces for every 1 real ounce, episode 17. This leverage keeps the price low. China knows this. They know the West is naked. So they use the Shanghai Premium, episode 16, to suck the physical metal out of London and New York. By paying $90 when the West pays $79, they act as a vacuum. They are removing the collateral that backs the paper market. When the vault is empty, the paper market defaults. The moment the COMEX declares force majeure, the price discovery power shifts instantly to Shanghai. China becomes the price setter for the world, and they will set the price much, much higher. Why silver? Why not just gold? Because silver is the West's Achilles heel. The US government holds 8,000 tons of gold in Fort Knox, allegedly. They have a buffer, but they have zero strategic silver. They sold it all, yet they need silver for every Tomahawk missile, every F-35, and every satellite. If China corners the silver market, they don't just break the dollar, they choke the US military-industrial complex. They can dictate the cost of US defense. Imagine if the Pentagon has to beg Beijing for the silver to build its missiles. That is the strategic checkmate. China produces silver, Russia produces silver, the West consumes it. They are squeezing the supply chain to force a geopolitical capitulation. Is this just a conspiracy theory, or is it calculus? Let's look at the likelihood compared to a pure market repricing. A market repricing, episode 112, relies on uncoordinated actors, retail investors, solar factories, slowly realizing there is a shortage. It is messy and slow. A state-sponsored repricing is coordinated and fast. When a state actor like China decides to move, they have infinite liquidity. They can print yuan to buy silver. The probability of this happening increases every day. The geopolitical tension rises. As we get closer to a potential conflict over Taiwan, the incentive for China to pull the plug on the Western metal market goes to 100%. It is the ultimate asymmetric weapon. It causes maximum chaos in the West with minimum cost to the East. Smart money assigns a 60% probability to a geopolitical squeeze happening before 2027. There are rumors of a new BRICS currency unit, tentatively called the unit. The white papers suggest it will be 40% backed by gold and 60% by a basket of local currencies and commodities. If silver is included in that basket, the demand becomes monetary, not just industrial. Central banks would have to hold silver reserves to back their trade. Currently, central banks hold almost zero silver. If they have to reallocate even 1% of their reserves to silver to join the BRICS trade system, the price goes to $500. There isn't enough silver in existence to satisfy monetary demand from central banks. This is the infinity squeeze scenario. China knows this. They are front-running the central bank panic. This is economic World War III. How do you survive it? The smart money playbook is defensive. 1. Don't hold the target. If the US dollar is the target of the attack, don't hold your wealth in dollars. 2. Hold the weapon. If silver is the weapon they are using to break the system, hold silver. You benefit from the attack. 3. Physical only. In a geopolitical financial war, paper contracts, ETFs, will be canceled or cash settled, episode 20. You need the asset in your possession. 4. Diversified jurisdictions. If the US government panics and tries to confiscate silver, episode 21, having some metal stored in Singapore or Switzerland is the ultimate hedge. You are a civilian in a financial war. Get to the bunker. Let's summarize the investigation. The silver squeeze isn't just about solar panels. It is about the end of the US dollar hegemony. The smart money playbook. 1. Recognize that silver is a geopolitical asset, not just a commodity. 2. The China bid puts a floor under the price. They will buy every dip. 3. The upside is higher than you think. In a currency reset, $300 is conservative. 4. Prepare for volatility. Economic war is messy. The price will swing wildly before it breaks out. The East is making its move. The West is asleep. This is the smart money wisdoms. The future belongs to the owners. Thanks for watching. See you next time.